This is going to be a little short version of whatever I'm going to present right now. All right. And yeah, sometimes I come across certain things, individuals, no limit gains and on. Why would I read from this? It makes sense. It actually makes sense. And I really hope we can learn something from this. Okay. The system is breaking in real time. I've been trading futures for 2 decades. I've seen volatility, crashes, and squeezes, but I've never seen the CME raise margins on a major commodity by 30% overnight for the second time in a single week. Look at the document attached. Effective tomorrow, December 31st. Silver maintenance margin hiked from 25,000 to 32,000, plus 30%. Platinum hiked 25%. Palladium hiked 22%. When the exchange hikes margins this aggressively, they aren't managing risk. They're forcing liquidation. And before I move forward, right now, at this very moment, silver is trading at $72. Right? Gold is sitting at 4,340. Okay, Bitcoin is just 87, 88. This is going back and forth. And silver right here is sitting at $72. Okay, all-time high was $83. Yes, it's down. You have to know exactly why it's down. All right, there's a lot of shenanigan that's happening. Never happened in history. This is the first time. And this is real. They're forcing liquidation. They know that hedge funds and retail traders run on leverage, but jacking up the capital requirements by 7,500 per contract overnight. They're forcing the longs to sell their positions just to stay solvent. See that? This is designed to kill upward momentum. It is a manufactured sell-off. With physical silver trading at $95.05 in Dubai in real price. Yes, physical silver in Dubai right now is sitting at 95 an ounce. Versus the suppressed paper price on COMEX, that what I just shown you, $72, paper priced. The banks are facing a margin call that would bankrupt them instantly. You're shorting silver 5 times than the supply, available supply. How do you expect to get out of that situation? Like, you need the cap. Silver cap is 800, and then you are doing 5 times more. So you need all the silver that's going to come out in the next 5 years to actually, fix this. Who's going to give it to them? I don't know, ladies and gents. Something is wild. Something wild is happening. The exchange is stepping in to save the house. They're making it impossibly expensive for you to hold long contracts, effectively bailing out the naked shorts. This is the exact same playbook they used against the Hunt brothers in 1980. When the Hunt brothers cornered the market, the COMEX implemented Silver Rule 7, changing the rules mid-game to liquidation only and hiking margins to the moon. It broke the price then. They're trying to break it now. This signals extreme distress at the clearinghouse level. If the market was healthy, they wouldn't need to suffocate it. If you're trading paper, you're fighting a rigged casino that can change the rules whenever the house starts losing. And you can see this, right? CME Group. The rates will be effective after the close of business on Wednesday, December 31st. See that? The current rate, everything is mentioned here. You have COMEX, 5,000, silver futures. You have palladium right here. And you also have the platinum futures. Wow. Pretty insane. Raising margins twice in 1 week isn't risk management. It's an emergency brake. When rules change mid-game, it usually means someone big is trapped and bleeding. Some massive bank. What are the chances bailouts happening? Bail in or bailout right very now, at this moment. Fed already injected massive amount overnight. None of us knew, right? They raise collateral for both longs and shorts to reduce clearing risk when volatility spikes. They are not targeted bailouts for naked shorts. Brokers may also lift house margins even more. In the short run, higher margins can force some leverage traders to trim positions, which can add to downside pressure, which is the sale that we've seen. This is straight up 1980 Hunt Brothers Playbook 2.0. CME isn't managing risk. They're managing bankruptcy for the big shorts. Physical at 95 plus in Dubai while paper gets capped. The divergence is screaming default incoming. Load the boat, stackers. This isn't risk management. It's coming from some crypto whale accounts. Crypto accounts are now all silver bros. Good to see that. This isn't risk management. It's rule changing under pressure. Margin hikes like this only happen when the system is stressed and liquidity is cracking. When exchanges hike margins overnight, it's a forced deleveraging event. Price suppression disguised as a risk control. Healthy markets don't need emergency margin shocks. This is about protecting the shorts, not protecting the market. Yep. Well said. Dang, what is the end game here? If you have traded physical, delivered physical delivered commodity futures for 2 decades, you would have seen this before or used and understand span and volatility. Sure. Every time silver threatens a system, the rules changes. Margin hikes are how the house wins when price action falls. Look at this. It's crazy. It's worse than we imagine. What would you rather own? Gold appreciated 85% of the last 2 years. Silver appreciated 166% of the last 2 years. Or a 10-year treasury note paying 4.1% with dollar decay. There is no stopping precious metals. A financial entity is trapped and it's called the US government. It is scarier than you can imagine. And it is. You're like, nothing happens. But, dude, $77 silver. $77. At one point, $100 note, federal note, buys us food and so much more. That price of gold and silver is showing you the devaluation of the currency in real time. Wow. And then this thing, Asian guy, comes out of nowhere. Everyone's talking about this Asian guy. Says, oh, it could be an AI trying to distract us from something. I'm going to keep all that controversial stuff out from here, all right? Because the number actually adds up and it makes sense, hence I'm presenting to you. I don't want to give you any kind of jargons and fakey or fabricated news. I do my best to research as much as possible. This is a smoking gun. 3 billion printed, 41 tons gone. No, that's not normal volatility. 36 minutes. The key difference, in 1980, they were breaking a financial manipulation. In 2025, they're attempting to break a fundamental physical truth. You cannot margin hike a solar panel factory into needing less silver. It'll backfire. Exactly. Because you have to understand this, right? Silver is needed for the society to function. I'm not going to put Bitcoin there. I'm not going to put ETH. None of these. They can disappear. The world will still move on to a level. But if silver disappears, that's not a joke. Look at electricity, the power grids, the data centers, and so much more. The AI. The whole economy is revolving around AI. And silver, by the way, AI needs silver. Silver doesn't need AI. That's the crazy part. So let this sink in. In 2025, they're attempting to break a fundamental physical truth. You cannot margin hike. Example, let's say you have like 10 kilos of silver, let's say in your safe, and Elon knocks on your door. He's like, hey man, I'll pay you more than what you need. I just need the silver to build my rockets. The money is worthless to me. I'll give you billions of dollars just for the silver because I need that silver more than you need it right now for my rockets. Just saying, just giving you a possibility, right? It's not like they need it because they need the precious metal to exchange. It's gold, it's valuable for work, real use cases, to actually build things. Yeah, you cannot margin hike a solar panel. Never have I seen CME raise margins twice in a week. Literally happened in 2011. They did twice. Check this out. Open interest. Half a billion ounce worth of silver contracts open. We don't know how many contracts are long or short, but we know most of the short contracts are naked. So before contract expires, tens of thousands of naked short positions have to buy to close before expiration. Do you get it now? Look at this here. Open and close. Wow. Looks like it's JP Morgan. Look at this here. Silver market manipulation has reached crisis levels in global finance. Recent enforcement actions reveal the shocking scale of this problem. JP Morgan paid $920 million in 2020 for systemic manipulation between 2008 and 16. Deutsche Bank and Scotiabank face similar penalties for silver price fixing. The paper versus physical disconnect is staggering. Daily comics trading 750 million ounces. This is insanity, man. We're talking about the Somali, the fraud and stuff. This is another massive fraud. Everything we're looking at right now has something to do with fraud. Crypto, blockchain, the memes. Stay vigilant, stay informed, stay well educated, and a happy new year. Let's see if I can bring you something awesome in the upcoming days. All right, ladies and gents, this is your host RBL, and I shall see you in the next one. Bye for now.